Scott Karosa, Las Vegas Real Estate and Mortgages, recently shared some thoughts regarding the mortgage closing costs rise. The average fees lenders charge consumers to close on a mortgage have increased over the past year in most states, according to Bankrate's annual closing cost survey. A home buyer getting a $200,000 loan pays an average of about $2,400 in origination and third-party fees such as appraisal, according to this year's survey. That's a 6% jump compared to last year when the same fees averaged about $2,264. Most of the increase is tied to fees paid directly to the loan originator. Excluding third-party costs, origination fees alone were up about 8.4% compared to last year. The low mortgage rate environment has played a role in the rise of closing costs over the past year, says Anthony Sanders, professor of real estate and finance at George Mason University. As historically low rates attracted large waves of refinancers, lenders didn't have to compete as much for business, Sanders says. The increased demand for loans has allowed lenders to charge higher fees while they can, he says. Banks realize that rates are going to go up and are trying to capture fees early on, he says. They know when rates go up, loan applications plunge, so they are trying to generate more earnings on anticipation of lower application volume and lower profits. Scott Karosa also shared closing costs on the rise as lenders anticipate downturn. Home prices and mortgage rates aren't the only costs on the rise when it comes to buying a house these days. Expect higher closing costs as well, according to a new study by Bankrate.com. Bankrate found the national average closing cost, including origination plus third-party fees, is $2,402, up 6% from last year. Washington State was among the cheapest, with an average cost of $2,208. Lenders appear to be boosting fees before the rise in mortgage rates turns off borrowers and makes it harder for lenders to attract new customers, a George Mason University real estate and finance expert told Bankrate. But there's more, according to Scott Karosa, Las Vegas Real Estate and Mortgages, as set out below. Bankrate looked at origination and third-party fees. Origination fees include items such as points, a calculation used to compensate loan officers, and payments for the loan application, other document preparation, loan processing and broker or originator fees. Third-party fees include payments for such items as the appraisal, closing attorney, inspections and surveys. Bankrate, however, said that not all lenders include all of the fees, and actual closing costs are probably much higher because its analysis did not account for the most highly variable costs, such as title insurance, title search, taxes and other government fees and escrow fees. Bankrate asked up to 10 lenders in each state plus Washington, D.C., to provide good faith estimates for a $200,000 mortgage loan on a single-family house in a state's largest city, and for a borrower with excellent credit who was putting up 20% in for a down payment. Banks are required to disclose all fees on the good faith estimate.